The WNBA recently released its 2026 schedule, revealing a shift in how the league manages its most significant commercial assets. Despite a season of record-breaking attendance and frequent sellouts, the league appears to be reducing the exposure of its primary draw. While total game movements to larger venues are increasing across the league, the Indiana Fever are seeing their high-capacity stadium appearances reduced by more than half. In 2025, 9 of Indiana's road games were moved to NBA-capacity arenas during a period of high fan interest. For the 2026 season, that number has decreased to 4. This reduction occurs while the league as a whole is expanding its use of larger venues, increasing from 15 to 19 total games moved across all teams. The league is expanding its reach, but it is specifically capping the exposure of the team that has driven the highest demand. League officials have attributed this decision to a need for caution. Last season, Caitlin Clark suffered a groin injury in July at TD Garden, leading to missed games. The stated concern is that teams are being conservative, hesitant to commit to 20,000-seat arenas without a guarantee that the primary attraction will be active. However, attendance data from 2025 contradicts this reasoning. Even when Clark was sidelined, the Fever continued to sell out larger venues, averaging nearly 16,000 fans at road games, 4,000 more than any other team in the league. The demand for these events persisted regardless of individual player availability, suggesting the injury caution argument may serve as a secondary explanation for a deeper strategic shift. Strategic decisions by specific team owners suggest a movement toward prioritizing the league's collective identity over individual stardom. Sheila Johnson of the Washington Mystics has publicly questioned the focus on single players, advocating for a narrative that highlights the entire league. This perspective is reflected in the 2026 schedule. After successfully moving a game against Indiana to a larger arena last year, the Mystics have opted to remain at their smaller home court for the upcoming season, despite the projected loss in ticket revenue. Similarly, Renee Montgomery of the Atlanta Dream has emphasized that league growth should be viewed as independent of any one player. The Dream, which moved a game to State Farm Arena in 2025, will also remain in their standard venue for 2026. This indicates an effort by ownership to determine if casual fans will maintain their engagement with the brand itself rather than specific superstars. The league is also utilizing expansion to adjust its public narrative. The arrival of the Toronto Tempo and the Portland Fire allows the WNBA to report growth in venue movements. Toronto alone is moving 5 games to major arenas such as Scotiabank Arena and the Bell Center. By replacing Fever games with expansion games in the total count, the league can claim overall growth while simultaneously suppressing the influence of its most profitable team. External factors are also influencing these scheduling choices, most notably the 2026 labor crisis. The collective bargaining agreement remains unresolved, with players having authorized a strike by a 98% vote. As of early 2026, free agency and expansion drafts remain frozen, and the start of the season is uncertain. This instability makes venue managers at major NBA arenas hesitant to reserve dates for WNBA games that may be canceled, preferring to book guaranteed events such as concerts or national tours. Historical trends suggest these initial schedules may not be final. In 2025, many venue changes were announced in the months leading up to the season as teams realized the extent of ticket demand. Professional sports typically prioritize revenue over internal politics, and the significant gap between the capacity of a 7,000-seat arena and a 20,000-seat stadium creates a financial pressure that is difficult to ignore. The WNBA is currently managing its transition from a niche organization to a mainstream commercial entity. The league is attempting to establish its brand identity at a time when a single player possesses a following that exceeds the rest of the collective. While owners may seek to avoid being perceived as supporting acts for a newcomer, limiting the league's primary growth engine is a significant risk. If non-Fever games fail to attract the anticipated crowds, the narrative of inevitable growth may be challenged. The coming months will determine if the WNBA embraces a superstar-driven model or continues to prioritize a collective approach at the expense of immediate commercial potential. Attendance figures and late-season venue updates will provide the definitive answer to whether the current strategy is a sustainable move or a significant business oversight. The media narrative and viewership data further illustrate this challenge. In 2025, national viewership for Fever games fell by over 50% when Caitlin Clark was unavailable, dropping from nearly 2 million viewers to approximately 800,000. While the league promotes a message of collective stability, advertisers and networks remain focused on the specific metrics driven by the Fever. By limiting these games in marquee arenas, the league risks its leverage in future media rights negotiations. This remains a high-stakes gamble where the pride of the established order is weighed against the proven economic impact of its most marketable star. Fans primarily invest in witnessing performances rather than supporting a league-wide narrative, and the silence resulting from suppressed demand may be more detrimental than the noise the league is attempting to manage. Progress in the next round of negotiations will likely depend on whether the league chooses to capitalize on the Clark effect as a permanent baseline rather than a temporary spike. The financial implications of these venue decisions extend to the league's revenue-sharing model. Under the current structure, ticket sales and local sponsorships remain primarily with the home team. When a team like the Atlanta Dream or the Washington Mystics chooses to stay in a 4,000 or 10,000-seat arena rather than moving to an NBA facility, they are effectively walking away from millions of dollars in potential gate receipts. In 2025, the revenue generated from a single Fever road game in a large arena often surpassed the combined earnings of 3 or 4 standard home games for the hosting team. By opting out of these moves in 2026, owners are signaling that the long-term control of their brand identity is more valuable than immediate cash flow. This creates a friction point with players, who are currently fighting for a higher percentage of league-wide revenue in the new collective bargaining agreement. The Players' Union has noted that the league cannot claim financial hardship or a lack of resources while simultaneously choosing to restrict the attendance capacity of its most popular matchups. This tension is compounded by the logistics of the 2026 expansion. The Toronto Tempo and Portland Fire are entering a league that is still defining its financial boundaries. Toronto, in particular, has leaned into a high-capacity strategy from the start. By scheduling games at Scotiabank Arena, the Tempo are betting on the Canadian market's appetite for women's basketball. However, this highlights a discrepancy in the league's logic. If the league is willing to take the risk of scheduling 5 major arena games for an unproven expansion team in Toronto, the argument that it is too risky to do the same for the Indiana Fever in established U.S. markets becomes harder to defend. The decision appears less about risk management and more about market diversification. The league office is attempting to prove that the WNBA can be successful in new territories without relying on the specific momentum of the 2024 draft class. The upcoming labor negotiations add another layer of complexity to the schedule. The 98% strike authorization vote is not merely a symbolic gesture. It is a response to years of perceived underinvestment. Players are seeking improvements in travel standards, retirement benefits, and a significant increase in the salary cap. The league's current strategy of limiting the most profitable games could weaken its position at the bargaining table. If the 2026 season begins with reduced attendance due to smaller venues, the owners may have less liquid capital to meet player demands. Conversely, the owners may be using the threat of a strike as a reason to avoid expensive arena rentals and staffing costs associated with 20,000-seat buildings. If the season is delayed or shortened, the financial penalties for canceling a game at an NBA arena are significantly higher than at a smaller college or municipal facility. Beyond the financial and labor concerns, there is the issue of broadcast quality. Networks like ESPN and Amazon Prime Video have invested heavily in the WNBA based on the visual spectacle of the 2024 and 2025 seasons. A sold-out NBA arena provides a broadcast environment that looks and feels like a major professional sport. Returning games to smaller, often older facilities with limited camera angles and lower lighting quality affects the television product. If the league continues to steer its most-watched team into smaller venues, the dip in production value could impact future advertising rates. As the 2026 season approaches, the WNBA finds itself at a crossroads. The data from the past 2 years shows a clear path toward rapid commercial expansion, yet the league's leadership is choosing a more moderated, controlled growth pattern. This approach seeks to protect the league from being overly dependent on a single star, but it also risks alienating a new fan base that expects the accessibility and scale of Major League sports. The success of this strategy will be measured by whether the Toronto and Portland markets can fill the gap left by the reduction in Fever marquee games. If the expansion teams fail to meet these high expectations, the league may be forced to revisit its scheduling priorities before the mid-season break. The impact of these venue restrictions is most visible in the secondary ticket market. By limiting the supply of seats for high-demand games, the league has inadvertently created a premium economy that primarily benefits resellers rather than the franchises or the players. For the 2026 season opener between the Indiana Fever and the Dallas Wings, entry-level ticket prices on the secondary market have already surpassed $140, with premium seating reaching into the thousands. This matchup is being marketed as a generational collision, potentially featuring the last 4 number 1 overall draft picks. including Caitlin Clark and the highly anticipated arrival of Paige Bueckers. By keeping such a high-profile game in a standard-capacity arena, the league is effectively pricing out the casual fans it claims to be courting. The financial upside of moving a single game to an NBA-sized arena is estimated at $400,000 in direct revenue, a figure that does not account for the long-term brand value of making the sport accessible to a wider audience. This economic tension is reaching a breaking point as the league enters its first year under a landmark 11-year, $2.2 billion media rights deal with Disney, NBC Universal, and Amazon. The broadcasters have invested in a product they expect to look and feel like a major league property. However, the current labor impasse has frozen the very mechanisms required to put that product on the floor. As of early 2026, the WNBA is operating in a status quo period, a legal limbo where the previous agreement has expired but no new deal has been reached. This has resulted in a total moratorium on league business. The most immediate victims of this freeze are the expansion franchises. The Toronto Tempo and the Portland Fire are scheduled to tip off their inaugural seasons in May, yet neither team currently has a single player on its roster. The expansion drafts and free agency periods remain on hold, leaving coaches like Toronto's Sandy Brondello to prepare for a season without knowing who will be in the locker room. The league's strategy of using these new markets to diversify its narrative is being undermined by the reality that these teams cannot yet build a brand around a roster. While Toronto plans to play select games at the 19,000-seat Scotiabank Arena and the Bell Centre in Montreal to gauge national interest, the foundation of that interest remains theoretical until a collective bargaining agreement is signed. The union's demand for a 30% share of gross revenue reflects a fundamental shift in how players view their value in this new era. They are no longer willing to accept a model based on net profits, which can be obscured by league-wide expenses and expansion costs. Instead, they are pointing to the unprecedented gate receipts and the cultural capital generated by the 2024 and 2025 seasons as evidence that the business model has already changed. The month of February is widely regarded as the deadline for avoiding a significant disruption to the 2026 season. If a deal is not reached, the league will lack the time necessary to conduct expansion drafts, free agency, and the rookie draft before training camps are scheduled to open. The WNBA is attempting to project a sense of business as usual by releasing a full 44-game schedule, but the lack of logistical progress suggests a high-stakes game of chicken. The league's decision to suppress its most profitable asset in Indiana, while simultaneously facing a total work stoppage, represents a pivotal moment. The coming weeks will determine if the WNBA can successfully transition into a billion-dollar industry or if internal politics and labor strife will stall its momentum at the very moment it was poised to go global.